talking to the ETF desk at the London Stock Exchange, and they thought it's probably end of Q3, early Q4. So the conversation started. So that's great. Great progress, great momentum. There's a recognition that Bitcoin isn't some dirty little secret. It's actually, $2 trillion asset. They have to at least study it because they've got, it's their duty to know the whole market and then advise on it. I applaud the FCA for taking this seriously because they could have just dragged their heels. So what needs to happen is industry, regulatory bodies need to come together and create what is the framework for what we see as the best way from a growth perspective, an access perspective, an education perspective, but also a safeguarding perspective. I can tell you Bitcoin's going to be around and it's going to be an increasing store of value for institutions, for governments, for countries. And so I can, wholeheartedly say with high level of confidence, that's what I put my money into. And I'll say, if you want to hold it for the next 5, 10, 15, 20 years, buy Bitcoin. If you want it for 15 minutes, then go and trade other stuff. Nobody wants, in 2 years' time, something to have gone wrong and a letter to come back from somebody saying, you advised me to do this and it went wrong.
Hi, Peter. Welcome back to the Bitcoin IFA podcast.
Good morning. So soon?
Yeah, we obviously recorded only a few weeks ago. And after the recording, we mentioned that we hadn't covered some stuff that we wanted to cover. And we said that we'll get you back on. Certainly in my mind, I was thinking, a few months down the line, I want to have some other guests on. But then after the bombshell FCA announcement, about 10 days ago now, as we record, you were absolutely the best person to come on and talk about that. So given that FCA announcement that there is a proposal and now consultation to lift the ban on retail access to ETNs, what was your initial reaction to that?
Brilliant. Absolutely brilliant. That forget about just allowing ETNs, right? Bitcoin as a topic being on the table is what we've been after for a very, very long time. Now the topic is on the table, industry needs to discuss with regulatory about how do we do this, because and the reason for this is there's some phenomenal people running Bitcoin businesses already. There's regulators that don't run Bitcoin businesses. So these two need to meet in the middle of how do we make this as good as we can for everybody in this country in the most secure growth, progress way. How do we as a country be a leader? Because we hear time and time again political figures saying we're going to be the leader in this, we're going to be the leader in this, we're going to be the leader in this. The way you become a leader in something is by getting the experts that actually do it to drive what should be the growth areas, and the regulators and the government need to listen to them. Because if the government and the regulators were the best builders of businesses for Bitcoin in this country, we'd already be miles ahead, but we're not. So what needs to happen is industry, regulatory bodies need to come together and create what is the framework for what we see as the best way from a growth perspective, an access perspective, an education perspective, but also a safeguarding perspective. All four of those things need to come together, and it's not one entity that can decide what's best for all of those. So the consultation that the FCA put out there about the proposal to remove the ETN ban is a brilliant, brilliant first step. And I, wholeheartedly welcome progress from the regulatory bodies. I wholeheartedly welcome progress from Parliament. The more we can get it spoken about, the more it'll be debated. And the more I see, the more you debate Bitcoin, the more obvious it becomes that you should just let people buy Bitcoin. Yeah, I mean, it's crazy that you can't, right?
Completely agree.
But yeah, phenomenal progress. And I was, like we spoke about when we had a chat, and I was on Jordan's podcast the day of it, and I was expecting not even this year for this ban to be undone. So I was, pleasantly surprised that after I said it's going to be months and months and months for it to then be 2 hours. Absolutely great, brilliant progress. I applaud the FCA for taking this seriously because they could have just dragged their heels. Regulators don't usually want to be first at something, and then when they're not first, they want to see how the others get on for a while before they make the move. But yeah, brilliant that they made the move.
Yeah, agreed. And I've actually had conversations with other companies and some DFM, some managers, DFMs, And what I've often seen is no one wants to be the first,
Absolutely.
but also no one wants to be the last.
Uh-huh.
So you need that first domino to fall. And so maybe the FCA were just waiting. They've seen the success of the BlackRock ETF in the US, fastest growing ever. Was its 11 months to 70 billion AUM, I think, something like that.
Yeah, I'm not sure it's the success of individual funds. It's the appetite of a country that drives it. Because, it doesn't matter which of the ETFs, BlackRock are always going to smash it. But the fact that America as a country is so well progressed, the fact that the government in America is really, really pushing forward, that's what drives the other countries. Individual successes of an individual fund manager, I don't think sways things. It's a countrywide movement that your country can then say, right, well, these guys are doing it, so we need to not be that far behind.
I would agree, although, so I had Robin Thatcher on recently.
Good old
And
Robin.
similar to you, where you were recording with Jordan, we recorded about 2 days before the FCA announcement. And actually, Robin was eerily prescient. We were discussing BlackRock launching over here or gaining access to be a crypto service provider in early April. And Robin was saying that he thought that that was going to be a domino that would help the FCA to change regulation. And he actually predicted it would come a lot sooner than people thought. So, as much as, because I don't know about you, but I don't get a general feeling from the UK that there is much demand, certainly not from financial advisors, the majority of financial advisors in my experience. So someone like BlackRock coming over here, they were never coming here to be a crypto exchange. So maybe there was some lobbying behind the scenes.
Yeah, but they've been signed off as a crypto asset provider, though, aren't they? So that's, I think that's different to then. Obviously, it's helpful a big name like that coming to the party. Not sure that then changes regulatory frameworks for other stuff like ETNs or ETFs, or they actually even push them to. I think IG now can sell spot Bitcoin to retail. So a crypto asset provider, I think if you look at a regulatory framework, it's very compartmentalized. So I'm not sure how much influence one section has over another. There's obviously an overarching thing, but it's the FCA is so lightly resourced that I think they just stay in their lane. And if there's something that's very, very difficult or complex, they might just say, well, this has got nothing to do with this, and this can't be undone because of this. So when I've had a conversation with them recently, it's a case that our ETF doesn't fall within the category in the rule set of crypto ETNs because it's regulated differently. It's in a different sort of an ETF's in a collective investment scheme rule book, which isn't the same as this rule book. So you can't just unilaterally say, well, this is now the rule for all of it, because there's different consequences. So let's say, for instance, if a collective investment scheme, current rules are you can't have one asset in it. There can't be a concentration risk. So that is why because a Bitcoin ETF was never banned because it was never around when the ETN ban came in. An ETF, Bitcoin ETF, can't be sold to retail because of the concentration issue, also the Bitcoin issue. But the concentration issue is the actual rule that's preventing ETFs being sold as a single asset. Because the rules typically for collective investment schemes is there needs to be a spread of assets and diversification. So this is where there's grey areas because it's nuts that for years and years and years, as a financial planner and a wealth manager, I had to, under the watchful gaze of the FCA, base everything I did on consumer outcomes. And now the FCA have got an interesting predicament here because, well, what's the best consumer outcome? It's that Bitcoin is made available in all of its forms in any suitable wrapper for the consumers. So if they don't allow Bitcoin to be bought in any way, shape, or form, and they shoehorn you into either spot Bitcoin from a particular provider or they shoehorn you into ETNs, how have they then pushed forward consumer outcome sentiment? And now, if they don't push for that, and they don't say, right, the absolute utopia and the first and foremost objective is consumer outcomes, I would feel like, how could they have then monitored me for 15 years, making sure I put clients first as a consumer outcome when they don't? And so that's the issues you have. There's so many different segments of rules that there isn't an overarching common sense rule, which means, yeah, that makes sense. This is what we need to undo to do that.
Yeah, I would agree there. So, it looks like the ban on ETNs is going to come. We'll come on to that. But if the FCA are now recognizing, crypto as a whole, but Bitcoin within that, as an acceptable asset for retail to buy in a regulated manner, so advised by regulated financial advisors, in theory, that should mean all access. So it should mean ETFs. It should mean on-chain spot Bitcoin that you can hold within your tax wrappers. So a question then, do you think the consultation, actually, before we come on to that, so the FCA have proposed to lift the ban, and there is now a consultation. So I know that you've had a conversation with the FCA. How do you believe the consultation is going to go? And then what do you believe will be the outcome? And then any potential timelines? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. Which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to thebitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's thebitcoinifa.com to book. Now, back to the episode.
You know the Bitcoin community like I do. Nobody is going to respond to the consultation say, no, we want Bitcoin ETNs to still be banned. So the mere fact it's been proposed, I'll be amazed if anyone says, no, we don't want this still. I want you still banning me. So that, in my opinion, is a slam dunk. They wouldn't have proposed it if they weren't open to doing it. And the consultation, there's no way people who have been starved of Bitcoin access in their ISA and their SIP are going to say, no, we still want to be banned, right? So that's happening, in my opinion. I'll be amazed to the point of, I'd give it a 99% chance. That will probably be, from what I've heard from, I was talking to the ETF desk at the London Stock Exchange, and they thought it's probably end of Q3, early Q4. Some regulatory consultant friends of mine I had a chat about, a similar time frame. In terms of your other question about on-chain in tax wrappers, well, that's a more problematic mechanical issue. So even if the FCA said you can do this, you would need to get let's just take, name a pension provider. Aviva. Now, what do Aviva actually know at the minute about holding actual Bitcoin on chain within their wrappers?
I would imagine it's very little.
And what's their appetite for even doing it?
I would
Probably
imagine
even
that's
less.
even smaller.
Even less. So that's a mechanical issue, not a rules issue. I think you're like, if you see in America, they're allowing banks to custody Bitcoin. We're quite a long way away from that, I believe, not just from a regulatory thing, but also from an appetite from the banks. And so I was having a conversation with a friend of mine last night who works for a custodian, which is owned by a very, very serious, a few really super large institutions. And I was asking him about, is there any appetite for a big institutional, globally recognized bank to lend against Bitcoin? And he said they are absolutely miles away, and they've been working on getting this done for this very, very big, well-known institutional bank to lend against Bitcoin from one of the most famous hedge funds in the world. So if you can't get an institutional bank who are very, very crypto friendly to look to lend against Bitcoin to one of the most established hedge funds in the world, that's the problem. That's years and years and years away from you and I holding actual Bitcoin in on chain in Aviva in a pension.
Well, given your recent success in predictions about Bitcoin, let's
It
hope that
probably
this
happened
one is
tomorrow.
also wrong.
It'll happen tomorrow. Maybe
Uh,
even today.
um, but I mean, from a technicality point of view, it is possible within SaaS pension. So if you are a business owner, you own a limited company, you can open a SaaS pension and you can hold spot on-chain Bitcoin within that. So
Yeah.
the dominoes there are falling, and that, to me, that just seems. I mean, it's a little unfair. You and I are both limited company owners, so it's great for us, but the vast majority of people in this country are not. They are
Yes,
retail.
that's regulatory arbitrage, really, though. That the purpose of a SaaS was where I think in the 80s the government said to the business owners, "Why don't you have pensions?" And they said, "Well, we want to use our money to run our business." So that's why SaaSes were created. So you could own certain things that would help your business and borrow money against your SaaS, or borrow some of your SaaS money to build your business. It's just so happened that somebody's worked out how to use those existing rules and get Bitcoin into it. But the SaaS rules are very, very different to SIP ISA rules. So I think SaaS rules aren't even regulated by the same. I think it's the Department of Work and Pensions that doesn't even that overlooks one but not the other. So it's like a whole different. I mean, that's a whole different ball game. And I love SaaSes, but most people can't have them, and the people that can have them, the provider that provides them would also have to then sign off saying yes, you can have Bitcoin, because that would be a commercial decision for that SaaS provider, and you would need to have a SaaS provider, which we know a few of them, that are commercial enough to say, well, if it's in the actual rules, it's in our rules, so that's fine. But if you look at some of the bigger SaaS providers, I bet they would say no, you can't do that. So as much as it is, keeping the little guy down, I just think it's such a far cry from where we are. And anyway, if that happens in 5 years, I'll be impressed.
All right, so sometime next week.
Tuesday.
um, okay, so then let's talk about the proposal. It from what I'm gleaning, it sounds like neither of us thinks that it really goes far enough. If it's just ETNs, doesn't mean you can't buy ETFs, I assume. So then, what does that mean for Jacoby and your ETF going forward?
Well, we're still in conversation with the FCA, so we don't quite know. They're very open. And to be fair, they were really, really good. They were very communicative. They had the whole crypto team on a call with us. They were saying, well, obviously this is the different rules, and this is how rules can be changed. This would be a consequence of a rule being changed. We can't then make one certain jurisdiction more favourable, competitive wise, than another by changing a rule. So we don't quite know where they'll get to. So, but they're very, very open at working with us, and they see the issue, they see the grey area. And my point to them was, like, you're the rules people. So what I suggest is let's put our heads together to work out as how do we change or alter or amend rules with the ultimate goal of consumer outcomes. So again, I'll go back to this, and I'll carry on. I shan't be dropping this. If Bitcoin's now okay, make it okay. In any way I want to buy Bitcoin, then I should be able to buy Bitcoin. Whether that's an ETN, an ETF on its own, put it on a ledger, keep it in my house. If Bitcoin's now okay, then let's just not do the quick and easy thing to get political point scoring or look like we're progressive. Let's do a proper job. So if we're going to do this, you're only ever going to probably unban Bitcoin once. If you don't do it right, it could have bad outcomes for a lot of people that don't understand what they're doing. So I think education first and foremost is a massive thing they need to work on, and they can't do that themselves. They need industry to come and do that. They also need to then say, right, if we're going to unban Bitcoin for retail, which ways should people be able to buy Bitcoin? And that isn't just ETN, spot, ETF. It's any way anybody wants to hold Bitcoin, and that needs to be reviewed at the same time. But my concern is it's not quick and easy to do all of that, but it is much quicker and easier to undo a ban on a particular product that was banned. And so I would imagine it's going to be that they understand the issue, but that's a longer puzzle to put together than quickly unbanning something that they can quickly unban. Because certain rules they have aren't led by them, they're led by policy in Parliament. So that it certainly takes longer to get Parliament to sit and talk about how you change certain rules to make Bitcoin available to everybody. But it's the FCA that banned crypto ETNs, so they can unban it. So I would imagine it will be that will probably go first, barring a miracle. But they're very aware that there's a growing demand for Bitcoin. There's a growing progress for Bitcoin adoption and regulatory clarity around the world, and they know they need to be further ahead than they are.
What did you mean by jurisdiction there?
So, for instance, right, if a Guernsey fund, i.e., our Bitcoin ETF, which sits outside of UK rules, it sits outside of EU rules, it sits within Guernsey rules. There's regulatory equivalency regimes that allow you to do certain things. So, for instance, our Guernsey ETF was approved by the Guernsey regulator, but you were never going to list it in Guernsey. So you need to then go and find a listing venue that is a more relevant one than the International Stock Exchange in Guernsey. So there's something called the EU designated state regime, which means an EU member state can nominate a non-EU member state as like an equivalence. So so we went to the Netherlands and listed it on Amsterdam because we spoke to the Dutch regulator and we said we'd like to be a designated state fund. And as long as they approve you to sell and market and be a designated state fund for the Netherlands, they trust Guernsey to have adequately regulated your fund. So therefore, you're allowed to then go and list in their country. So what the UK, for some mad reason, don't have with its own, the Guernsey, Jersey, Isle of Man are UK crown dependencies, but we don't have a regulatory equivalency regime with our own crown dependencies, but they do with the EU. So we left the EU and we could, do whatever we want with our own crown dependency regulators, because of course they're going to be, welcoming because it's us, it's the same country. But there isn't currently that regime. So now, if, for instance, the FCA said, okay, we get the problem, we'll let you do this with a collective investment scheme with one asset in it. What then would happen is everybody that wanted to do a fund with one asset in it that can't do it in the UK could then go to Guernsey, get it done because they can passport it in, which then puts the UK as a competitive disadvantage because the UK fund provider couldn't do that. So it's a way bigger puzzle than you'd ever imagine.
Sounds like a lot of smoke and mirrors and slightly bonkers.
Well, the consequences are genuine, aren't they? So if the government wants to make a certain amount of money off UK asset managers, they need asset managers to be in this country. If then everyone flees to go to one of these other jurisdictions because there's a new rule been put in place that can get you something you want in, say, Jersey, which you can't get in the UK, but it can passport you into the UK, well, all the fund managers leave and go to Jersey, which isn't good for HMRC's tax receipts because the funds are now in Jersey, which pay less tax, and not here. So there's way more things that need to be considered than just unpicking a rule because the Bitcoin is one access full blown.
I see. So yeah. So you
But
think
what I do think though is, regardless of how much work it is, if you're going to do it, do it. And if we're going to say, well, ETNs are unbanned, well, don't just be quick and easy. Do a proper job. The people in this country deserve a proper job to be done, not just one product because it's quick and easy. And so I think that might be I hope that isn't the case, but that's the quickest solution for them to do something that makes them look crypto friendly.
agreed, and at the very least, it's doing something, right? So even
It's
if it
getting the
is just
conversation
lifting the
going,
ban,
right?
yeah,
Getting the conversation going is what we've been wanting this for years. So the conversation started. So that's great. Great progress, great momentum. There's a recognition that Bitcoin isn't some dirty little secret. It's actually, $2 trillion asset. If you can say to me it's a $2 trillion asset, no, we'll forget that. You'd be crazy. But the conversation is on the table. Bitcoin is a topic in people's mouths. Progress will follow that for sure.
agreed. Now seems like a really good time actually to go into. So what is the difference between an ETN and an ETF?
Let's go back up a level more. So the European market has a categorization of ETP, right? An ETP is an exchange traded product. So that's a categorization of the three exchange traded products. So an ETC is an exchange traded commodity, an ETN is an exchange traded note, and these two are debt securities. An ETF is a fund structure, so it's an equity. So in a fund structure, You buy shares in the fund, you own them. The fund buys the Bitcoin, and so the fund that you own shares in owns the Bitcoin. With an ETN, that's not the case. The ETN is you give them your money, they go and buy the Bitcoin, but you don't own that. They owe you that. So that's the difference. It's like if you had 10 grand, would you rather 10 grand or you'd rather me owe you 10 grand?
I'd rather
That's
have
the
the money.
difference.
Yeah.
Yeah. And an ETN works in different rule sets to ETFs, which is why in Europe they're widely used across the European market because that was the obvious way initially. If you look at the European Exchange Traded Fund or ETP rules, that's the obvious way to do a single asset product that doesn't sit within a legacy existing framework. So in Europe we have different rules to other areas of the world where you can have single asset products, and so the European market doesn't really have that. So we had to work out how do we actually create that within the existing rule sets and not just do another exchange traded note because there are already quite a few of them around. So that's why we had to work out how do you create a fund structure to give ourselves a differentiating factor than all the notes. But an ETN is a debt that they owe you. An ETF is you own it.
Okay. Understood. So I think I've heard you use an analogy before that, if you live in your house and you own your house, you own the house. But if you live
Wow.
in the house and someone else owns the house, but they owe you the price of the house, that's
Yeah,
kind of similar to an ETN.
yeah.
Okay.
And a lot of it. So the rules were when the FCA allowed ETNs to be offered to professional institutional investors on the London Stock Exchange, they all had to be physically backed. So these ETNs that will be listed, they very well, you know, I can't prove it, but I'm fairly sure they would have to hold the Bitcoin they say they've got in case you did call on that Bitcoin to then come. But in our instance, we don't own the Bitcoin. We don't own the fund. We don't own anything. The investors own it. So that's the difference between the two.
I see. Okay. So one is a company that you're investing with, and the other is a fund that you own a share of in the same way that you would own a share of Apple if you bought 10 Apple stock.
Yep. So you directly own it. Instead of you giving me money, I buy it, then I owe you it.
I see. Okay, that's a lot clearer because I was going to come on to a question. So I've had a couple of ETNs reach out to me as soon as the news came about. They're interested in me promoting them. I can't promote them within my
Good.
workshops. I can obviously talk about them, and there are some talks of sponsorship going on. But
And I bet there's talks of all sorts of shitcoin ETNs they want to do as well.
well, so I've explicitly made it clear it's Bitcoin. It's not a crypto podcast, and I am a Bitcoin, not crypto guy.
Good.
Um, but they have all taken great pains to assure me that they hold the Bitcoin. So there is a one-to-one relationship between the Bitcoin that someone buys with them and that they hold. Some of them have even spun up separate trusts to hold the Bitcoin so that then the Bitcoin is not actually held by the company in case they were to go bust. I mean, but we're talking large institutions, so probably not going to go
Let's
bust,
not
but
forget Lehman Brothers went
yeah,
bust, and none of these ETN providers are bigger than Lehman's.
agreed. Agreed. So that there is obviously there is a an additional layer of risk when working with an ETN that isn't found with an ETF. Is that correct?
Exactly that, yeah. So you take on the counterparty issuer risk of the ETN provider. They may well have the Bitcoin that they say they've got, but in my opinion, why would you even bother taking the risk if you don't need to? So if they could outperform, if their Bitcoin could outperform our Bitcoin, worth the risk. If there's anything else that's different where they could make you wealthier than a fund could, worth taking on the risk. If you don't need to take the risk and the outcome is the same because the Bitcoin grows at the same rate anyway, why would you even consider it?
Agreed. Yeah,
Whether they
totally
put it
agree.
in a trust in an SPV somewhere or not, why even bother when there's none here?
Yeah, as I say, completely agree. So then, what are the next steps for Jacoby and your ETF?
So we can sell to retail in Europe. So we recently, as I'm sure you saw, the Guernsey regulator, I managed to get them to agree that retail should be able to buy Bitcoin ETFs. So, as
Congratulations.
you know, we're listed on, in Amsterdam. We love the Dutch. We like other European jurisdictions that can buy it. I've had an awful lot of inquiries actually for now we're open to retail. There's a whole new world of things you can do. So other fund managers come to talk to you about, is there stuff that we can do together? International fund distribution businesses have got in touch with us to say, look, can we go and market this to, expat IFA businesses around other jurisdictions in the world that don't have the rules the UK has. So that's really good, progressive. I we're going to commit, and this is exclusive to you actually. So we're not going to do any other cryptocurrency product. We are only going to do Bitcoin and Bitcoin related products. So we will look to now create other Bitcoin ETFs, whether that be multi-asset with Bitcoin inclusion, Bitcoin yield. There's a lot of movement around Bitcoin staking, but I see from my background in wealth management, investing is about long-term wealth creation. And if you said to me, what cryptocurrency could I buy that's going to be around in 20 years' time and increase my wealth? Well, the answer could be loads, but I can't pinpoint one of them other than Bitcoin. And I liken it to tech stocks and gold. So I don't know that there'll be some amazing tech stocks in 20 years' time, but I can't sit here and tell you right now what they are. But gold's going to be around in 20 years' time because it's been around for 4,000 years. And I think gold, that's the difference between Bitcoin and the other stuff. And my background has led me to the point where I think that long-term wealth creation is more important than daily trading whatever new altcoin is out there. There'll be another altcoin that's more technologically advanced than Ethereum. There'll be another one that's better than Solana. There'll be another one in 5 years that's better than that. But I can't tell you right now what that's going to be. But I can tell you Bitcoin's going to be around and it's going to be an increasing store of value for institutions, for governments, for countries. And so I can, wholeheartedly say with a high level of confidence, that's what I'd put my money into. And whenever I was advising clients back in my financial advisory days, my general philosophy was, if I would do with my dad's money or my mum's money or my wife's money, what I'm suggesting to do with your money, I'm happy with myself. I personally will carry that, morality over. And if somebody said to me, what crypto should I buy? I'll say Bitcoin. And I'll say, if you want to hold it for the next 5, 10, 15, 20 years, buy Bitcoin. If you want it for 15 minutes, then go and trade other stuff. I don't know what the answer to that question is, but long-term wealth creation, Bitcoin is probably the best thing that's happened in our lifetime that's going to advance that. You've seen that with the life-changing amounts of money people have made with the Bitcoin treasury companies, not just the guys in the UK in the last 2 months, but Metaplanet, uh, the blockchain group in France, Strategy, formerly MicroStrategy, that all Bitcoin based, changed people's lives forever. And I was talking to a friend of mine who works for one of the Bitcoin treasury companies, and they had a really, really storming day recently. And I said to him, just take a second to realize the value you've added to lots and lots of people's lives. And I don't think you quite realize that unless you have spent time working in wealth management and financial advising, because you genuinely see how your expertise and help changes somebody's life. But if you're a fund creation person and you put a fund out there, you don't necessarily see or meet the people you change their financial lives of. But where you and I have spent years actually sitting with people, getting to know them, getting to know their family, understanding their objectives, you actually see the difference you make to people's lives. And it's really, really valuable. And so I love the fact that people can put out Bitcoin related products that increases in value, means somebody can probably leave more money to their children, afford a better way of life, pay their mortgage off, retire earlier. Those things are genuinely rewarding. But seeing, green candles on a screen, that's great, but you don't see how it actually affects people. So I personally wouldn't tell my family or my wife to buy anything other than Bitcoin or Bitcoin related products. So that's where Jacoby's going to go. So whether we can sell a Bitcoin ETF to retail the same day as ETNs can or not, it's kind of a relevant one. But I'm building, a 15, 20-year business here, 15, 20-year business, not a fly out the traps day one if you can. Because the growth in Bitcoin exposure in the UK won't all happen because Bitcoin ETNs are available in, I don't know, October. Don't know when, but it will happen over the next 10 years. And so that's where value can be created to people's lives. You could build a genuine business. And even if you don't do this within the next couple of years, if somebody did it in 2 years' time, they'd still be probably really, really, really early. And so you and I being in this right now is extraordinarily early, really. If you think of the grand scheme of what's the global asset worth? It's like 900 trillion, and Bitcoin's two of it. So we've got a really, really long way to go. So I think over the next few years, Bitcoin exposure via regulated, understandable, familiar structures with advice and education in this country, it's going to be a huge market. And we're going to go after that, not throw any shitcoin at a wall and see what sticks market.
There's a few things I want to touch on there. So, firstly, that's great to hear that you're going to focus on Bitcoin.
Mm-hmm.
I actually had someone reach out to me recently, and they sent me a video about XRP.
Yeah.
And they said it was some guy on YouTube making some kind of argument for why XRP, because it's essentially being included in like the underlying technology of US CBDCs or something like that, the tokenization of something in the US, that it's going to go to $500 a coin. And I was like, okay, it may do, right? I don't know. It's a market. Anything can happen. It might be a good idea to have a very small allocation to XRP just in case. But my underlying issue with XRP is it's centralized, and
Yeah.
they were like, no, it's hard cap 1 billion coins, and I was like, sure,
But who owns
but
it?
it's the point of failure are the humans that control the protocol. So if XRP goes to $500 a coin, the humans that own the protocol are going to find it very difficult to not say, let's just create another million, like 1 billion and 1 million, and then that's an immediate 500 million for us, and we'll just dump it on retail. Like, it's not the protocol, it's the humans in charge. So I completely agree that 20 years from now, the only one that I know with certainty will exist still is Bitcoin, in the same way gold has for 4,000 years.
Uh-huh.
I want to touch on the treasury companies there as well. I'm sure you got in on a recent one. I will name it. It was Smarter Web. I was in at IPO, and it has
You were in
significantly changed
IPO.
my life.
Amazing.
I was in at IPO
Yes,
in
I
my
wasn't. I
SIP.
wasn't quite an IPO, um, but I met Andrew, and that guy is the nicest, um, calmest guy, but he has got an underlying level of relentlessness, and God knows where that's going to end up. But
Well,
Coincilium, I was in early on Coincilium, um, and that's just going to do the same sort of thing, I think.
I'm also in Quintillion a little bit later than some, but still a very low average
But
entry
if you
price.
look at what Metaplanet did, if you got into Metaplanet 2 months late, don't care.
Yeah. Well, I mean, again, it's there's the short term trade there, which is it's already brought not life changing money, but significant money to my life in 2 months. But if you're looking 5-10 years out, I mean, that's retirement money. I think where
Oh,
those two stocks are going to. Not financial advice. Do your own research, obviously. And then the last thing I did want to touch on there from what you just said is you do have a background in wealth management. You were an IFA for many years. So what do this recent ban, or sorry, the proposal to lift the ban for financial advisors, and in my experience from speaking to a lot of financial advisors over the last few months, there has been a tendency to hide behind this asset, if it's even an asset, is unregulated and I can't talk about it. So what does this proposal, if it's coming as early as, say, Q3, Q4 this year, what does it mean for IFAs?
Hey, team. Just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
Not a lot. Not a lot. I think if you look at IFAs, so there's in the UK financial planning market, there's three types of advisor. There's Tide, who will work for a particular company. Let's call it, I don't know, Nationwide. Nationwide won't be doing that. You'll have multi-ties, so restricted advisors that would work for a network. Let's call it St James's Place. They won't be piling any money into crypto ETNs. The other big networks, Quilter, Openwork, whoever they still are, I don't know who they all are these days. But the fact that you could, on your SIP and ISA, go in and buy a crypto exchange traded note does not mean a financial advisor of a restricted or a multi-tied or whatever it is network would now be allowed to say to their clients, include this. It would go through a whole other process of being assessed by that company. So if you look at, I was on a call the other night with head of ETFs for Grayscale, and he was saying, even though America has had Bitcoin ETFs for what, 16, 17 months now, loads of the advice networks and the platforms still don't include Bitcoin ETFs. So there's an awful lot more to come from the American market that you can't even begin to imagine. And most of it is still retail. They say the institutions are coming, but it's retail. So in this country, most financial advisors are either restricted or independent, but follow a sort of particular framework. So it isn't the advisor you necessarily need to get into to advise to allow this, because everyone is terrified of compliance and the FCA and somebody coming back and suing them. So there'll be an awful lot of work that has to go into advisors, advice networks, looking into this, and then saying, okay, we're happy to say this is something that could be in your portfolio. So like you and I were talking about beforehand, there's not many advisors that get Bitcoin. And I think the independent advisors, the ones who are wholly independent, who have to then go and assess all other investments, there's only a few of them that are Bitcoin friendly people anyway. So now imagine you have to start your education on Bitcoin from the start. That's what the advisors will now have to do. And so that's not a tomorrow job. That's a long time. And so there's going to be an awful lot. I think there'll be a floodgate of people that are already Bitcoiners that have been itching to buy it within their SIPs and their ISAs. But I'll be blown away if actual advisors start to advise people use crypto ETNs in a portfolio for two reasons. The advisors never heard of an ETN. And secondly, they've got no idea about Bitcoin. So learning about those two things would have to be very, very thorough before they can start advising clients. Because again, nobody wants in 2 years' time something to have gone wrong and a letter to come back from somebody saying, you advised me to do this and it went wrong. So no advisor. The advisor would rather not have clients get a good return on a bit of a portfolio than get sued. So there's an awful lot they'll have to go into advisors before they will go anywhere near Bitcoin, but then ETNs.
Sadly, I would agree, but obviously that's why we're here. We're here to help and educate financial advisors.
Yeah.
And I think
so you should really be filling your boots, to be honest with you. This is that you're exactly what they need. But then you look at the advice market. I've not said, but I don't know the difference between how many IFAs there are, how many advisors within networks they are. I would imagine IFAs, truly independent financial advisors, are in the minority. So even if you could get into all the IFAs, you still only have a fraction of the market. So if you look at St James's Place, for instance, they've got thousands of advisors. You would need to go into St James's Place and you would need to get them to say, okay, we'll listen to Bitcoin, we'll listen to ETNs. But what they're going to do when they're ready is they're going to do their own fund. So they're not going to say buy these ETNs. They're going to say, because they're a distribution company, all advice networks are effectively a distribution force for their own funds. Quilter do it with their funds, SJP do it with their funds. So they're not going to be starting to say to people, go and buy another fund provider's Bitcoin product. So we're a long way away from advisors advising on Bitcoin.
Well, I mean, we we have some workshops booked, and I think some will be very keen. The truly independent will be keen to be doing this.
Well, yeah, they have to be. They have to at least study it, because they've got it's their duty to know the whole market and then advise on it. So they're the ones that will be the first to lead, and they if we can get some of them to start to understand it, you can spread the word about why Bitcoin should be a portion of somebody's portfolio. They're the ones that are going to drive it. And what the restricted advisors don't want is their clients leaving to go to an IFA who will allow Bitcoin. So just like we saw countries start to push for Bitcoin, other countries don't want to get left behind. The same thing will happen. IFAs will eventually start to learn about Bitcoin and start to allocate people's assets to Bitcoin. And then, let's say I'm, down the pub chatting to my friend about how my pension's grown versus his. If the Bitcoin one outperforms the non-Bitcoin one, well, he's going to say, why don't you speak to my advisor? And so if the network's advisors start to lose clients because of this, that will be the thing that drives them to want to include it.
That's exactly what I had Peter Dunworth on one of the earlier episodes of this podcast, and he said exactly the same. So he pitched it as a 1 to 2% allocation to Bitcoin back in 2016. That's a bad day in the stock market. Yeah. And then he just left it to run. And he has said he's had more inbound from referrals than ever before, because obviously 9 years later, Bitcoin's gone 150x. That 1 to 2% now represents 50 to 75% of their portfolio.
But that's another issue, the rebalancing of it.
Yeah.
Because imagine you say 1 to 2%, and then it becomes 60. Well, you can't leave it at 60 if you're doing a proper risk profiling job. Because if that then tanks 40%, well, that's not a bad day in the stock market. That's a bad decade. So this is the issue we've got: is what allocation should you have? How does that fit into legacy risk profiling models? What rebalancing would you need to do? Because Bitcoin grows at historically, it's grown at such a faster rate than everything else. Every quarter, you'd have to rebalance it every quarter, because it would be notching up little by little every single time. And when it goes down, it'll go down faster than everything else. So then you have to rebalance again. So the rebalancing of it is going to be a real monitoring job for advisors, because it's like a different beast, isn't it? Really. Like I was chatting to, I don't know if you've met Richard Byworth. Richard Byworth is brilliant. He runs Seize Capital. He runs a crypto Bitcoin hedge fund. He used to be a convertible bond guru for Nomura. But we were saying, like, back in the day, if you got your client 15% annual return, you'd be buzzing. Like, you'd be the most popular advisor going. Now, if you look at Bitcoin, like, what might that do every year? Like, if you look at, like, people talk about different rolling periods. Since inception, it's annualized 147% a year. Like, imagine, like, what Bitcoin eventually, like, it's going to come down and it's going to stabilize, obviously. But if you just imagine the differences, they are worlds apart. So how do you then get that and get your head around that and say, right, this is the allocation you need, but we'll rebalance it, every week?
Yeah. I mean, it's going to be tricky. I've show some numbers in my workshops that if you'd have put 10% into Bitcoin in 2015, 1st January 2015, 10% of a client's portfolio, it's gone absolutely bananas. So I think if you'd have had 10 million in assets under management, you take a 1% fee from that every year. It's now worth something like 315 million. You're earning 3.1 million, 3.2 million. Bitcoin now represents something like 96% of the portfolio, and it's obviously wildly volatile because 96% of it sometimes drops 50 to 80% every 4 years. Yeah. So the rebalancing is going to be a challenge, and it's going to be key. But obviously,
what I love on the numbers is I modeled, forget about 150%, like forget it. But I modeled what would you do over 30 years. If you did, I'll just, start off with $1 million or pounds or whatever it was. If it did 10%, 20%, 30%, 40%, 50%. And I'll stick with 30%. Sailor sticks at 29%. So I'll call it 30. And if you genuinely did this as a long-term investment, which I believe it's nothing other than, $1 million at 30% over 30 years is 2.6 billion pounds. Now that is genuinely mind-boggling. And I had to go through every single cell to make sure my calculations were correct. But that's the numbers. And so that's what it's not outside the realms of possibility. If you did 20 or 30% a year when it's been doing 100 or 60 or 80, whatever period you're looking at, it's not outside the realms of possibility that it does do that. And so that's incredible. And if you then say, well, let's look at Fundsmith as what a brilliant fund that's been over the last however many years. But when that was absolutely at its peak, it was annualized at 16% a year. If you look at that versus Bitcoin, well, nothing, is it? So I think there's it almost has the issue of it sounds too good to be true. And that's one of the other hurdles we'll have to get through, I guess.
Yeah, Alan Smith said something quite true on I had him on recently, which was, if Bitcoin's performance, so the last 5 years, yeah, obviously there's different rolling periods. I think Saylor also uses, since his Treasury Reserve strategy, so from August 2020, it's annualized about 62% ARR. If that had another name, so if it wasn't called Bitcoin and all of the polarizing things that comes with it, but if that was called the Vanguard Pro Growth Fund and it got 62% ARR, everyone would be piling into it.
Yep.
Yeah.
Yep, totally.
Right, Peter, I'm wary of time. I know you've got a plane to catch. So there's only 2 questions left. So the first one is there anything I haven't asked you that I should have?
I don't think so. I'll come back on again.
Okay, we'll make it a monthly
Just do a
thing.
weekly one.
Yeah. And we always close the show with, what's one thing that Bitcoin has brought to your life outside a number go up? You were on recently. You said that it was your epiphany, I think was the word you used, or your awakening was the word you used,
that's
and
right.
the people in the Bitcoin community. Is that still the case?
Oh, without doubt. So as I said, I've got a plane to catch. I'm going to Bitcoin Prague. Just absorbing yourself in the people that go to these events and speak at them. Fortunately, I've been asked to speak on an unbelievable panel, actually. We're on just after Jack Mallers. Lawrence Lepard's on there with me. Super heavyweight panel. Seyfedin was meant to be on it, but unfortunately for him, his dad died, so he pulled out. So they said, can you come on? I thought, well, that's some bloody big shoes to fill, but we'll give it a crack. But it's things like that, like when you're able, it's such a fortunate position that I'm able to sit and talk about something I really, really like to people that get it. And, I especially at the moment, now we've got good regulatory progress in this country, because there were years and years I'd wake up dreading what shit we're going to have to deal with that day. But now I wake up, yes, another day in the Bitcoin world. And it's just such a refreshing thing. And, sometimes people wake up to go to work and it's just mundane, they hate it. But I genuinely love it. And even when I'm sat there on a stage, on a panel, or talking to people like you, I absolutely love it. And it's going to work every day knowing that this is really, really fun, and you're trying to help people build their financial futures at the same time, which I find incredibly rewarding anyway. It's just so good. And if Carlsberg could make jobs, it'd probably be a bit easier than it is, but it would be the same topic.
The beauty's in the challenge.
Yeah, oh yeah, for sure. It's very rewarding when you do something that's really, really hard. But I'd be less grey if there was less hurdles, I'd say.
Well, you're blessed, and I think most of the people in the Bitcoin community are. They get to wake up every day thinking, I get to do stuff in Bitcoin today.
Yeah.
Peter, enjoy Bitcoin Prague.
Oh, don't you worry, I will.
See you next time.
See you, mate. Have a good day.